Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 10th, 2024, and we're diving into AutoZone's latest earnings report for the first quarter of fiscal year 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. AutoZone, a leading retailer and distributor of automotive replacement parts and accessories, has just released its first quarter earnings report. There's a lot to unpack, so let's get started.
Revenue and profitability overview. Let's start with the top line. AutoZone reported net sales of $4.3 billion for the first quarter, which is a 2.1% increase from the same period last year. John, can you elaborate on the sales performance and profitability?
Absolutely. The net sales growth is modest, but it's important to note the increase in same-store sales, particularly the 1.8% rise on a constant currency basis. The gross profit margin improved to 53.0%, up by 16 basis points, thanks to higher merchandise margins. However, operating profit saw a slight decrease of 0.9% to $841.1 million, indicating some pressure on operating expenses.
Earnings per share analysis. Moving on to earnings per share, AutoZone reported a diluted EPS of 32.52, which fell short of the forecasted 33.54 by analysts. John, what are your thoughts on this?
The EPS miss is certainly a point of concern, especially since it was anticipated to be higher. The net income for the quarter was $564.9 million, down from $593.5 million last year. This decline in net income, despite the increase in sales, suggests that the company faced challenges in managing costs effectively during the quarter.
Operational efficiencies and future outlook. AutoZone has been expanding its footprint with 34 new store openings this quarter. How does this align with their operational strategy and future outlook?
The expansion is a strategic move to capture more market share, especially in international markets where same-store sales grew by nearly 14% on a constant currency basis. The inventory increase of 8.7% supports this growth strategy. CEO Daniele expressed confidence in their positioning for future growth, emphasizing initiatives to improve customer service and market share. Additionally, the company invested $505.2 million in share repurchases, reflecting a commitment to delivering shareholder value.
Risks and challenges. What are some of the risks and challenges AutoZone is currently facing?
Operating expenses have increased to 33.3% of sales, which is a concern. The net inventory per store remains negative, though slightly improved from last year. AutoZone's debt levels are significant at $9.0 billion, which could pose risks if not managed carefully. Additionally, the company faces forward-looking risks such as currency fluctuations and competitive pressures, which could impact future performance.
Key takeaways. In summary, AutoZone's first quarter performance shows steady sales growth and a strong gross profit margin, but challenges remain with earnings and cost management. John, any final thoughts on AutoZone's investment prospects?
AutoZone remains a strong player in the automotive parts industry with a solid growth strategy. However, investors should keep an eye on their ability to manage costs and navigate the competitive landscape. The company's commitment to shareholder value through share repurchases is a positive sign.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on AutoZone's performance in the comments below.